Welcome my top 10 people I would trust with my last slice of pizza. Please remember this is not financial advice. Yesterday, Bitcoin closed with a red daily candle and now pulling back toward the weekly open and trading back within the range of the day when news broke that Michael Saylor had reportedly sold some Bitcoin. As we've been discussing in previous videos, the weekly horizontal resistance and the 50-day EMA formed a strong resistance zone and price was rejected almost perfectly from that level. The weekly open is now one of the most important levels on the chart. If buyers can defend it, Bitcoin still has a chance to recover, but if we lose that level, we could see sellers take control and push price lower. One encouraging development came from the US dollar index. The DXY broke down yesterday, which is generally a positive sign for Bitcoin since the two assets tend to move inversely. A weaker dollar often creates a more favorable environment for risk assets like Bitcoin. That said, one daily breakdown isn't enough. We need to see continued downside in the DXY over the next few sessions before we can confirm that the breakdown is valid. If that happens, it could provide additional support for Bitcoin. Another positive sign is the ETF data. After one large red day of ETF outflows, we've now seen 2 consecutive green days of inflows, and if this trend continues, it could provide additional buying pressure for Bitcoin over the coming weeks. The key battleground remains around the $65,000 level. This area is packed with technical resistance, the 50-day EMA, weekly horizontal resistance, the 50-month EMA. When multiple technical levels align like this, they create a very strong resistance zone. Until Bitcoin can break above and hold this area, the bears still have the advantage in the short term. A confirmed breakout above $65,000 would be a significant bullish development. Looking at the monthly liquidation heat map, liquidity continues to build on both sides of the market. To the upside, there's significant pool of liquidity extending towards $67,000, sitting just above June's lower high. On the downside, major liquidity clusters remain around $60,000 and then again near $57,000. As we know, markets are often drawn toward liquidity, so these remain the key levels to monitor over the coming days. The question is simply which side gets targeted first. Funding rates are also worth paying attention to. They remain positive and continue to rise. While many traders interpret positive funding as bullish, historically it can actually become contrarian indicator. When too many traders are positioned long, the market becomes vulnerable to a long squeeze where price moves lower to force those leveraged positions out. It's another reason to stay cautious despite improving sentiment. The next few trading sessions should give us a much clearer picture of whether Bitcoin can regain bullish momentum or whether the bears remain in control. And that's why I posted on X. The cost basis profit-loss ratio still hasn't entered the red zone, signaling bearish structure and capitulation risk. This Bitcoin chart has identified major cycle bottoms for years. Historically, when price approaches the CVDD line, it has often marked strong long-term accumulation opportunities. That level is currently at $48,656. So what do you think? Has Bitcoin truly bottomed? Or is the real capitulation still ahead? Let me know in the comments. Have a nice day. Bye.